back to the second half of our conference on trading and listing, Unleash Europe's Capital Markets. I'm here, I think, with a very interesting fireside chat where we're just discussing, this is such a beautiful setting, the chimney would fit very much in the fireplace, but we will have to imagine the fire. But I think I have here two very good people to discuss with a little bit. What is it about getting the CMU really off ground? And with me I have Mirosław Kachniewski. He's President and Managing Director of the Polish Association of Listed Companies, as well as Aurélien Narminio. He's Head of Equity Listing of Euronext, but he's also chairing the listing task force within FESE. And I maybe wanted to start to discuss, and just to set the scene, we've heard before that Europe's share of market cap globally has shrunk from, I think, the year 2000, where it was around 17% to 10% nowadays. We've heard recently both the French and German central bank have called there needs to be more completion of the CMU project. And capital market integration obviously will contribute to, I think, financial stability, geographical diversification of funding sources. It will strengthen the private sector, encourage risk sharing, and all the wonderful things that equity does. And obviously, in crises, we all know that equity is paramount to buffer exogenous shock. So the question, I think, how do we get CMU going? How do we get more supply of capital to European companies? And maybe the first round to my panelists, and Aurélien, I start with you. 10 trillion on bank accounts, not flowing into markets. What can we do to encourage that money to come onto capital markets?
Thank you, Rainer. So I'd share a few thoughts. I mean, if we want more capital to flow to European markets, we need to work on access to the market itself. We need to work on access to the products, the packaged products that allow for investments at all levels of sophistication of retail, obviously, and institutional investors. And we need to make sure that information is transparent and relied upon by investors. So what I would say is at Euronext, what we do, we're kind of a mini CMU, right? We consolidate 7 markets by now in Europe, on which 1,900 issuers are listed, representing close to 6 trillion euros of market capitalization. And what that does beyond the numbers is really to give completely seamless access to capital markets, to anyone, to European markets, to anyone who's connected to this platform, because behind the 7 venues we have, there's only one technology platform, one order book. So that's what we do in terms of working on access. And we think this is kind of our response to fragmentation, which is a topic that was talked upon about a lot. Then about information, I think there's a few things that can be improved. We welcome very much the work that's being done on the European Single Access Point, so that all investors can access public company information in one reliable place. In terms of the trading information, obviously we have talked about consolidated tape earlier. I don't want to redo the debate that happened. We think that most investors and retail investors would benefit from a 15-minute delay post-trade tape, which would be sufficient to check their execution against market prices, and would be cheap and simple to implement.
Maybe to you, Mirosław. What do we need to do to get more supply of capital?
So I would say two things. One is more regulatory, the other practical one. The regulatory thing is that if you ask a question why retail investors are not coming to the market, I would say is that because it's too complicated to do so. Because in fact you can lose the savings of your lifetime within 5 clicks on your smartphone. But if you want to invest in shares or bonds or blue chip companies, you really have to pass examination for an investor. You have to undergo all of these suitability tests and so on and so on. So from a regulatory perspective, it's really very difficult to become an investor. Now, from the practical perspective, I think it's also very difficult because if you are talking about a single access point, like Aurélien mentioned, within a few years we'll have single access point for, at least for information, ISAP, lecturing single access point, but this will be just a point of access to information, not to trading. And what I think the next step, or perhaps simultaneously, there should be some work undertaken to make sure that once we've got ISAP, we'll have the possibility to make trades. I mean, retail investors will have the possibility to make trades easily at very low or perhaps even at no cost. So as was mentioned in relation to Euronext, perhaps single access could be combined of all EU licensed exchanges. Because I think, for retail investor, let's say buying shares of SME listed here in Prague, it's really complicated, it's costly, it's time consuming, it's not something that could be done automatically. With ISAP and with exchanges having single access point for trading, I think it could be easy, and I think would have more demand, I mean more supply of capital on the market.
So I think really probably a call to the EU Commission in its retail strategy to think about how to allow for pan-European access for the retailer where it's very difficult still, and possibly tied to the ISAP. I think that's an interesting one. Maybe just to think about pensions. I mean, that if personal history, you know, when I was growing up in the US, people were discussing over the dinner table how to invest for their pensions. The 401k, extremely successful. In Sweden, they have auto-enrollment. Would that maybe be something like that, where we would have a pan-European pension plan? Well, we have the PEP, but it's not really being used. But what would maybe to enable pensions, what is sort of the key? Is it financial literacy? Is it having those kind of auto-enrollment models? How can we really get more pensions channeled into capital markets in Europe?
Well, so perhaps I'll start with the example of Poland, because some years ago we really had a lot of inflow of capital to the market coming from pension funds. And just a short warning that, well, sometimes if you have too much of that, then you'll have a problem. So now we have much smaller flow of capital coming from pension funds on the market, and this is really problematic because pension funds, who are supposed to be usual long-term investors, now they are becoming on the Polish market short-term investors because in fact they are rather selling than buying shares because in net terms they have negative capital flow. So less money they absorb from future pensioners than they have to pay to the system. And this is problematic. Obviously, in normally designed system, this shouldn't be like this, and normally, still more and more people should be paying their money to the system. I have no idea what to do to incline either regulatory or in practical terms the funds to invest more in capital market. Well, the first and the easiest way, but quite perhaps also complicated, is that they would earn money on this. So I would imagine that if the markets are growing, if the valuation of the companies are growing, then you would never have to ask anyone to come and buy shares. People and funds would come because they would like to earn the money. The problem is that over the last few years, we didn't have such an experience on the market.
Mm-hmm. So really to have an interesting product portfolio, and maybe, Aurélien, maybe for you to comment, how to mobilize pensions, what do you see sort of as key? Is it literacy? Is it auto-enrollment models? What is the...
I think the key. I mean, it's pensions, but it's retail incentives at large, right? You have schemes in France, for example, the PEA PME, which allows for a tax-free investment wrapper for retail into SMEs. You have also the PEA for larger corporations. And I think we lack a bit of a harmonized or at least a common philosophy in the approach on mobilizing retail capital into public equity markets through tax incentives. It's quite uneven between the countries, and we need more of those.
So also, I think a call for consideration in the retail strategy when the Commission is coming to that. Let's probably shift a bit on liquidity of EU markets, and we've heard earlier BioNTech, Spotify, Linde, they're going to the US for higher valuation and liquidity, and maybe what can we do to, I think, make EU markets more interesting for companies as well as for investors? I mean, what's sort of the the thing, Aurélien?
So I think the key is to work on efficiency and scale. So that's what we are doing in terms of providing a deep liquid market for companies to raise capital on and for investors to invest on. Also, I think there's a work on perception. There's a lot of myth between US and EU markets. We see that a lot in listing when we speak to prospects, where there's a myth that they would get a higher valuation in the US. The reality is the higher valuation in the US is down to the nature of your business because capital flows freely. So if your business is based in the US where it's simpler to scale your business, obviously your business is worth perhaps more than in Europe, where you have to work a bit through the different cultural and regulatory environments you're working on in the various countries you operate your business in. And I think there's an educational work that we are doing with founders and company executives to explain to them that listing in Europe is right for them because when they list in Europe, they get ballpark, those are the numbers we see, about 60% of shareholders are European, 30% are American, and 10% are from the rest of the world. When they list in the US, they get 90% US investors and 10% rest of the world. What does that do when you manage a company? Well, basically you have either investors that understand the environment you operate in, or you have investors that sort of understand it from a US perspective, and so might be calling you to do things that are inadequate for your business. And that's sparing you all the details about the legal risks and the regulatory difficulties of being a European company listed in US markets. So.
Mirosław, liquidity.
Okay. So speaking from the perspective of smaller issuers from a smaller market, perhaps I would indicate that the discussion that we had just before and this chasing microseconds and so on is not the biggest problem of small issuers. It's rather a problem that you don't have liquidity at all, and in fact the biggest problems with small and medium enterprises is that they are not big. So once they are not big, in fact you cannot earn money on listing fees because they can't pay high listing fees, and you are not going to earn money on trading because there is no huge trading. And this kind of vicious circle that it's very, very difficult to change and think about that. And perhaps an idea would be free trading of such companies. I mean, I know it sounds quite strange. Who would pay for that? Well, we could find some sources of financing, but one of them could be that perhaps let's start some pilot program for selected companies. Tomorrow we'll have SME awards. Perhaps one of the awards should be the 5 years of free listing and trading, and we would verify if this changes anything, you know. We are in Prague, so let's check it, okay?
So maybe a reaction to that. So first on the issue of trading fees for retail companies, at Euronext what we do is we incentivize market makers to offer price improvements compared to the central limit order book for retail. It's called a best of book. So we encourage retail investors to invest in the market and offer them better pricing. As to your comment on listing fees, obviously for exchanges, if you segment the listing market, the SME market is very much a market where exchanges are central to the origination, because we participate a lot to educating founders, entrepreneurs, family businesses about the benefits of listing. This requires a lot of work on the ground. We invest heavily in technology to make the listing possible and attractive and efficient for those companies. We invest a lot in the regulatory framework, both in terms of engaging with policymakers, but also in making sure that our processes are efficient, or secure, or easy to understand for those companies. So I would doubt that a lot of investment would flow from our industry into covering these companies if there was absolutely no fees. I would just mention one number. For the smallest companies listed on Euronext, the annual fee currently is 3,000 euros. So I don't think the exchange fees are of any sort of importance.
So just to comment on that, if it's not important money, so let's get rid of this problem and let's just cut it to zero, because in my opinion, zero is quite a magic number. And if it's 0 or 0.007, it's huge difference. And similar discussion I've got with Warsaw Stock Exchange, that they are not going to cut the trading fees to zero, because they say, well, still anyway, if we cut the trading fees, the investment firms will increase their fees. I would say, but once you cut it to zero, there is no possibility to do that because you can advertise, well, this is free trading in these particular shares on this particular market. So I would really insist that zero versus non-zero is important. And if it's just 3,000 euros, so perhaps it's not important. And even from the perspective of the company, the listing fee is not a huge issue. But what we could say is the trading fees. So let's imagine that all EU investors, all the people who have these single access points, they have, well, on this market, on Euronext, or this segment of Euronext, I can trade for free. Well, I think this would be a change, really.
Well, maybe we discussed that a little bit in the panel before, payment for order flow, and if something is for free, you always need to be careful of conflict of interest. But I think, obviously, it's also important how ease of access and obviously cost play out at the end. Let's maybe move to a couple of more questions. Ecosystem. I would think, I always hear the ecosystems in the US are so much more attractive. Is that something that bothers your companies, Mirosław?
Well, now yes, but previously not. I mean, I would say that we used to be quite a center for raising money by SMEs. So very, very small companies are entering the market or were entering the market. Just one number, the median capitalization of the company listed on the Warsaw Stock Exchange, the regulated market, is just 30 million euro. So these are really small and very, very small companies. They've entered the market because there was really quite an ecosystem for cheap and easy raising of capital. And once new regulations, new EU regulations came into force, which obviously they are good for the huge companies, once they've been introduced and imposed on small companies, they really killed the market. So over the last few years, we didn't have an IPOs because it became too costly, simply speaking. And I was even thinking about considering local markets like local food and so on. So you've got, these exceptions that, well, for production of dairy, you have to undergo special procedures, but this is local cheese, so you can do it a different way. So perhaps if it's just a local company offering securities to local people, perhaps it should not undergo all the requirements. But at the moment, it's not the case.
Well, I think the next panel will discuss that a bit, but let me ask you, you did some research on SPOs especially, and I think cost and benefit of listing. And let's maybe touch on that briefly for the end of the fireside chat. I mean, if I look at that, why are not more people listing, and what is really the benefit, or what should be the benefit of listing?
So we've really undertaken quite a research on the Polish market, on the costs of benefits of listing. Well, the huge costs of listing, they're really huge, and there are the costs of listing as fees to exchanges. This is really small, just 5-7%. So it's really not something important from the perspective of the company. There are other costs which are much higher. But what was shocking to me was really benefits or lack of benefits. I mean, the companies indicated they can't see any benefits coming from listing, even in financing their activities. So it was really surprising. And then it came to my mind that perhaps we should really create something, some benefit for listed companies. And this benefit could be possibility of raising money, of undertaking secondary public offering without prospectus. So obviously you have to prepare all of the information to the public so that the investors would know what they are buying, why, and so on and so on. But you wouldn't have to undergo the procedure of approval of prospectus by the NCA, which usually takes quite a lot of time. Usually you have no idea if it's going to take 3 months, 6 months, or a year, or whatever. So it would be really quick, fast, easy access to money by listed companies. And once they have such a benefit, I would really see that as something that would make their life easier than non-listed companies.
And maybe to you, benefit of listing. You're head of listing. What are you pitching? Why should companies come in, and what can we actually do to strengthen the demand side for capital, which I think is also part of the equation?
So I think the key, and I concur to some of your remarks, Mirosław, on the need for simplicity, but the key benefits, obviously, we all know, it's ease of access to capital, so obviously secondary public offerings are very, very important. It's also independence, because when we're talking about SMEs, the competition is not between exchanges, it's between exchanges and private equity, and we explain to founders and to company executives that when they list, they sell their own strategy to the market, who buys it and or doesn't buy it and provides a price on it, but they remain in charge of defining the strategy. When a private equity fund comes into your capital, they come with a strategy for their own investors and they impose it on your company. Usually that's how it works, or some various shades of that concept. So those are the benefits that companies should be aware of. Obviously, there's the idea of having a currency for acquisition, of course, that is central. But of course, as Mirosław said, we need to make sure that the burden of being listed is controlled, so that complying to your ongoing obligation is ongoing regulatory obligations is not too burdensome, and that you can benefit from that. And we completely agree with you that as long as a company is listed and complies with all the ongoing obligations, we should try and have as much as possible waivers on prospectus issuance when companies are issuing follow-on capital.
Well, I mean, to sum up, time's flying fast today. I think a lot to be done on CMU. I think strengthening the supply side, if I really look at pensions, if I look how to enable retail, how to unlock, I think, the 1 trillion on accounts for investing into the capital market, but also really on the demand side of capital, obviously a lot to improve the ecosystem. I think this is what we're going to discuss in the next panel, how to unlock IPOs in Europe. And with that, I say thank you very much for both of you. I think it was very interesting. And the solutions we'll hear now.
Thank you, Rainer.